Nobody knows, how long the temporary effect will be and what is the long-term evolution of inflation.
From now on, the vaccine booster will be open to all adults aged 18 and over, 5 months after their last injection.
Indication came from our scientist colleagues that indeed they were observing what looked like a new variant.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. A new variant of concern rattles markets. Investors flee to safety over this more transmissible COVID strain. European governments come under pressure. The UK and Germany ban travel to and from southern Africa, where the COVID strain is believed to have emerged. And stay with Bloomberg Surveillance Early Edition. This hour, we speak to the South African Minister for Public Enterprise, Pravin Gordhan. Send in your questions on IB Plus TV Go. Now, first thing is first, and I have to say it's pretty much a bloodbath across the markets. There's a very clear move away from some of the risky assets, investors dumping those, flocking into havens. And you can see the European stock 600 down some 2.4%. Travel and leisure getting the brunt of it. I mean, we had a great roundup from Sid Phillip looking at some of the stocks that are the most under pressure. For example, IAG, the parent company of British Airways, was down 20%. It's now only losing 9%. Still a pretty big move, as we don't exactly know what we're dealing with. Now, look, if you look at fears of the variant, they first were discovered in South Africa. They may spread internationally, and we're a little bit in a wait-and-see situation. So first, the markets, very thin volumes, so some of these moves are maybe bigger than expected. Look at crude oil, down some 5.7%. We don't exactly know what we're dealing with. A lot of researchers are saying, well, look, it's of interest. It's worse than what we have, without actually being able to explain what that means, whether it's more lethal or whether it spreads quicker. You can see the FTSE down some 3%, the CAC 43.5 lower. This is something that means that after the record highs we have for the stocks, it's actually the hugest, biggest sell-off since we had of November 2020. Now, the COVID variant, a new dramatically different strain, we understand. Scientists, though, still working out if it's more transmissible or more deadly than the previous ones. This is what the South African health minister had to say.
Initially, it looked like, it was just some cluster outbreaks, maybe gatherings and so on. Some of these were attributed also to some university campuses like TUT area in the Tshwane metro. But from yesterday, indication came from our scientist colleagues from the Network for Genomic Surveillance, that indeed they were observing what looked like a new variant.
We're here to discuss the bloodbath on the markets. Janet Moy, investment director at Brewer & Dolphin, Bloomberg Intelligence senior pharmaceutical analyst, also Sam Fazeli. Janet, thank you so much for coming on. Sam, we'll get to you in a second with the hard questions on virology. But is it a case, Janet, of sell now and ask questions later? Why are we seeing such big moves in the markets?
Thanks for having me. I think, first of all, the U.S. market was closed, and then there has been very thin liquidity. I think that really exacerbated the degree of the sell-off. And, of course, the situation is very uncertain here. We don't know how deadly is the virus, how contagious it is, and how resilient the vaccine can be to this strain of variant. So I think there is a lot of uncertainty. And I think, given the market rally, I think it makes sense for some of those investors to just take some profits and take some risks off the table.
Yeah, Sam, so what do we know? I mean, when do we know actually what we're dealing with in terms of, what researchers can tell us? Do we find out looking at the cases for hospitalizations in South Africa, or is there another way of telling how deadly and how spreadable this is?
Yeah, there's really no other way, Francine. You have to wait and see. I think South Africa will be able to tell us after the phenomenal work they've done already on the genomic analysis and the speed with which they've responded. Which I think we really have to congratulate them on that. They will know very quickly whether this is a very rapidly spreading virus. We have to watch out for factors such as founder effect, which are very too esoteric to discuss here. But it looks like that it could be more transmissible, or at least as transmissible as the Delta variant. And then the next question is it more troublesome? That will take a bit longer because it takes longer for hospitalizations to result after an infection.
Sam, we're trying to understand, some of the moves in the markets and whether that's matched actually with some of the concerns that we're seeing out there with what virologists are telling us. Sam, when's the last time we had I don't know whether you call it a false scare, but, a variant that could have been worse than expected that actually, was more mild than we thought at first?
Yeah, I don't think we've had anything really. I mean, Delta and Alpha were the ones that really changed things. And the market's reacting to the strength of the phrases and the words that the scientists are using in referring to this variant. We had Mu, we had Gamma, we had Beta, we've had Epsilon, we've had Kappa, but none of them really had any characteristic or rapid spread that led people to worry about it. And you have these 32 mutations. It's just laden with mutations. What I want to do, Francine, is to latch onto a very tiny hope, and that might be wishful thinking, that with these mutations, it's actually become less troublesome in terms of the severity of disease it causes. There's no reason to think that, but we always hope that when a new variant comes along, it would be a little less, have less morbidity.
So, Jen, I'm sure a lot of the traders are actually calling their virologists or their experts to try and figure out exactly what we're dealing with. We have a great story on the Bloomberg terminal that says what we know about the new virus variant that's rocking the markets. And frankly, in a nutshell, it's not much. So, Jen, when you look at, I don't know whether it's game theory, but if you model what this could be and what it happens, I mean, worst case scenario is that we go back into lockdowns and so it changes the trajectory of the Fed, or what exactly is the market pricing in today?
Yeah, so I think before this breaking news, I think the markets have been pricing in much more hawkish Fed and, of course, the Bank of England as well. And I think if we do, I mean, there's a lot of uncertainty. If we do see this virus persisting and being more deadly and there's more concern, I think central banks will have to slow down their potential rate hikes or QE tapering. So I think markets would definitely revise down their hawkish expectations.
But that would be supportive of the market. So what are they looking at today?
Yeah, so I guess it is really the uncertainty. It is the initial knee-jerk reaction to this breaking news. We really don't know what is going to happen because I think it takes time for the virologists to figure out the exact the dynamics of this virus. So I think it's really the uncertainty and the thin trading. So I think it's just, and also after a very strong rally. So I believe that, we have been there, we have been through the Delta variant and the market has ended up okay. I think if this happens again, I think the authorities will do whatever they can to support the economy and the markets again. And what I really think is positive on this this time is that governments are reacting much more quicker. For example, the UK already banned several countries from the South African region to land in the UK. So I think that's all quite positive. And of course, we have antiviral drugs and we have booster vaccines. So I think this time around, we could be more cautiously optimistic.
Yeah. So Sam, a couple of questions on that. First of all, the booster vaccine, again, does it, come back at the forefront of how instead of taking boosters, maybe we should distribute some of the vaccines more equally and equitably across the world? And does it take actually 6 weeks for some of the mRNA vaccines? And could it be the case that actually we have a vaccine that works for this new variant in 6 weeks?
Yeah, so to your first question, absolutely. We've shut our doors to South Africa and some other African region countries. Let's at least in response give them vaccines to hopefully get their population vaccinated. But let's not forget that South Africa's already told us that they have enough supply. It's a matter of getting people to roll up their sleeves and getting those vaccines to those people. So perhaps it won't help South Africa, but maybe some of the region and countries around it. But boosters, Francine, I think it's possible that any virus, any of these mutants will still be able to be neutralized by the vaccine antibodies. But if you have, but at a lower level, which means that if you have much higher levels, you'll be better protected potentially. So that's what I think we need to continue to think about and continue the booster process. And I've forgotten your second question, sorry.
Yeah, and the second question actually was just whether the mRNA vaccines can adapt so quickly that we'll have something workable even if the current vaccines don't work in like 6 weeks.
Yeah, the number that they've given us is 100 days, Francine, that they can create a new vaccine in 100 days, but then it has to be tested. And I think you could do probably the same with the adenoviral vectors, such as Johnson & Johnson and AstraZeneca, maybe a bit longer.
Janet, is the market complacent? I mean, it's amazing when you look at, I had conversations with senior bankers in the last 3-4 weeks, and we talked about inflation, we talked about geopolitics, we talked about, something unexpected. But actually, it wasn't, like a COVID variant was not at the forefront anymore. Like, is this a human reaction that we've lived through it for 2 years, and so people just want it to go away?
Yeah, I think there's some element to that. I think on a lot of people's top risk, it has been inflation and central bank policy, but COVID is no longer the top risk for many investors. So I think this comes as something quite shocking, and that's why we're seeing this market reaction. So I think right now, we think the areas that are vulnerable would be, obviously the travel, the leisure stocks, the energy areas, which the energy area have done very well. So we're seeing a bit of sell-off there. But I think there could be some potential buying opportunity for quality companies going forwards. For example, quality industrials or staples, as we head into a more slowdown phase of the business cycle.
And what about airlines? Airlines and travel, is that it for now, or do you pick them up at some point?
Yeah, I think it is highly uncertain at this stage, and I think I'll be cautious in that area because I think this could potentially linger, given the time it takes to analyze the virus and to figure out what happens to the economy. And of course, I think even before this variant, Germany and Austria, they're already facing more stringent restrictions, which is already not great for the sector. So I'll be very cautious here and not trying to get in early.
Yeah, all right. Thank you both for a great conversation, trying to figure out exactly what the market is looking at, what's priced in, and what comes next. Janet Moy there from Bruin Dolphin and Bloomberg Intelligence's Sam Fazeli. In the meantime, Didi, our other big story, we haven't talked about it that much because we've been focused so much on the virus. Didi actually dropping 10% in pre-market as China has asked it for delisting. This does seem to be an escalation of exactly what we've been seeing from Didi. China is set to ask Didi to delist from the U.S. on security fears. Unclear how that will happen, who will pay for it, and some of, I guess, the protocols involved. Coming up, the new variant, first discovered in South Africa, leads to a global stock sell-off. A number of travel restrictions against South Africa. So later on in the show, we'll be speaking to the country's Minister for Public Enterprise. He's Pravin Gordhan. Send in your questions on IB Plus TV Go. This is Bloomberg.
We will be suspending flights from 6 Southern African countries, and we will add in those countries to the travel red list. Those countries are South Africa, Namibia, Lesotho, Eswatini, and Zimbabwe, and Botswana.
Well, that was the UK Health Secretary, Sajid Javid, announcing a travel ban to and from South African nations in response to a new variant of concern. Now, over in Brussels, the EU Commission President, Ursula von der Leyen, has also said that she will propose a so-called emergency brake to stop travel from Southern Africa. This is what the picture looks like for some of the travel markets. Now, we did see a huge sell-off to some of the individual stocks. You can see, for example, IAG was down some 12%, but now they're actually still leading losses, but losing a lot less than they were about an hour ago. You can see IAG down 11%, with Lufthansa down some 10%. Now, the other story we're watching, of course, is Didi. This is after a Bloomberg scoop says that China and Chinese regulators have asked Didi's top executives to devise a plan to delist from U.S. bourses. Now, this is according to a Bloomberg scoop. We spoke to people familiar with the matter, and this is a pretty unprecedented request that's likely to revive fears about Beijing's intentions for its giant tech industry. Pre-market, that stock price, Didi, dropping some 10%. We're back with Janet Moy, Investment Director at Bruin Dolphin. Janet, you're a great student and a great scholar, really, of China and some of the ins and outs of what we're living through. First of all, if this plays out, this is a pretty heavy request to actually ask Didi to delist. So does it mean that China will be much more aggressive with their giant technology companies?
Yes, we think so. I mean, since the sell-off began in Chinese tech, we have been saying that it's probably not over yet. The market is still finding a bottom because we don't see that the regulatory clampdown would ease in the short term. It's going to be quite persistent, and I think today we got further confirmation that it is not ending anytime soon, and in fact, it has been getting more aggressive. And delisting Chinese companies from the US market has been one of the tail risks and concerns that we have for these tech giants. And I think we are seeing a pretty big risk out there at the moment.
Janet, what my fear is actually that that we don't pick up on some of the things that the market is underestimating. Are we underestimating the change which China will go through in the next 12 months? First of all, growth could be stable, but significantly lower to what we're used to, and then we could see a lot more of this regulation coming through.
Yes, absolutely. We have been cautious on China. I mean, despite the sell-off, we haven't been adding, contrary to many other investors who find a lot of value in China. And that's because we think the change is a regime change, is long-term, and the government is very keen to see the changes happening in the Chinese economy. And of course, what you mentioned about is the slowdown, and it is actually potentially can be quite deep, because you're talking about the housing sector, which has direct and indirect links of GDP of 30% of the economy. So while I don't think there will be a meltdown, because after all it is a very important sector, but I think the spillover effect within China could be quite big, and so that's why we are talking about both a cyclical slowdown and I think secular slowdown, because that clampdown could curb some of those innovation, investment. So I think we remain cautious on the region.
But Jen, so what does it mean for the rest of the world? Again, if you look at the U.S. and other parts of the Western world, can we fare the China slowdown? Are the two regions that decoupled or not so much?
Yes, I think if we do see a more severe Chinese slowdown, then of course that could have some marginal negative impact on the global economy, given it is such an important player in the supply chain and in terms of consumption. But we think that it should be relatively contained in the Chinese economy. And in fact, I think, for example, the sell-off in the Chinese stock, actually some of the flows could be going to the US tech stocks instead, because investors that chase growth, they have to find somewhere to invest. And also we think that the impact will be more limited, because the U.S. is having its infrastructure package, and we are in the developed world and globally. Actually, we are going to invest a lot in the transition to green energy. So there would be demand for some of those commodities that have been seeing weaker demand from China, for instance. So we think overall it would be relatively contained in China without a very severe impact on the global economy.
Jen, the other big story is, of course, oil. Brent down some 5% because of this new variant. I mean, that's a nightmare for OPEC Plus meeting next week in what was already going to be a quite complicated meeting.
Oh, yeah, obviously. I think... Well, so far, I think OPEC still has the upper hand, because they can choose to limit the supply, and they can stay put. And I think it is all still very uncertain. So the oil price reaction is quite a knee-jerk one. So we still think that OPEC likely to have the upper hand, but obviously the near-term trajectory is probably a bit more downward pressure on the oil price, given that people probably traveling less again because of the concerns on the virus, and also just the dampening in the market sentiment. But we still likely see oil prices being quite elevated, because we think that the supply is still very much constrained at the moment.
Janet, thank you so much for all of your insight. Janet Moy there, Investment Director at Bruin Dolphin. Now, coming up, it's not just Red Friday, it's Black Friday too, but will supply chain snags and price concerns actually mean this year's deals fail to impress? We talk about Black Friday next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. So Thanksgiving marks the start of the annual holiday season, and with that comes holiday spending. Let's get all the details with Bloomberg's Ed Ludlow. Ed, good morning. So great to have you in the studio. Look, when you look at the variant, I don't know whether people were going to buy a TV or a washing machine and say, actually, I'll hold off to understand whether I keep my job or not, or whether we're overthinking it.
Yeah, so, I mean, these 4 days are really all about digital sales, online sales, e-commerce. It's interesting because in the States, where there's less discussion around a lockdown, we're not so sure about the threat of this new variant. More people go to a physical store. While it's a novel concept in the UK and the EU, a lot of people are shopping online, and the early indications that we'll break records for this 4-day period. But, broadly, this season is really stretched now. Consumers globally are spending between November till Christmas.
I mean, these are not impulse buys, right? So we're not expecting the kind of strength to have a huge impact.
Right.
It's not like you go in the store and then you walk out.
Right, and the other side of this is the retailers themselves. They're not discounting. They're facing huge labour costs already, stretched supply chains. It's actually really difficult right now to get inventory. There are so many out-of-stock messages, and the variant, that could impact that too. Because remember, a lot of the COVID restraints are tied to lockdowns. You can't work in certain conditions, so I think that is a concern.
I've been trying to get a mini camera from one of my boys. I haven't been able to find it.
Don't miss the chance.
It's stuck on a container somewhere, and it's just not arriving in the UK. Our Ed Ludlow there with the very latest on Black Friday. In the meantime, investors still dumping risk assets, flocking to havens as this new variant of the coronavirus makes its presence known in global markets. Authorities around the world have been quick to act, so have traders, with the European stock 600 down almost 3%. This is Bloomberg. A new variant of concern rattles the markets. Investors flee to safety over this more transmissible COVID strain. European governments come under pressure. The UK, Germany ban travel to and from southern Africa, where the COVID strain is believed to have emerged. And stay with Bloomberg Surveillance. Early edition, we'll be speaking to the South African Minister for Public Enterprise, Pravin Gordhan, in just a few minutes from now. You can also send in your questions on IB Plus TV Go. Well, good morning, everyone. It's certainly a busy Friday, not the Friday that we were hoping for post-Thanksgiving, where people kind of still digest some of, the turkey they had the night before and do a little bit of admin. I mean, they have to hit the ground running. When you look at investors today, they're really dumping some of the riskier assets and flocking to some of the havens. This is the kind of moves that we're seeing across the market globally. So stocks, U.S. futures slide, treasuries, German bonds, yen are rising. If you look at the South African rand and other emerging market currencies, they're also sliding. Now, the one thing we need to keep an eye on is, of course, authorities around the world have been quick to act against this new variant, but researchers have yet to determine exactly what it is, whether it's more transmissible or whether it's more lethal than previous ones. And the other thing we need to keep an eye on is, of course, the fact that it's very thin liquidity out there because it's the day after Thanksgiving. So some of the moves may be more exacerbated because of that. Bitcoin, 55,000. Down some 6.5%, so not the haven that maybe some market participants thought it would be in this kind of trading environment. So it's been a big year for our collective digital space. Facebook's gamble on the future with Meta was then followed by Microsoft's virtual offering. Now, the total market cap of cryptocurrencies topped $3 trillion, and NFT is in the Collins Dictionary word of the year. Well, we'll have plenty more, of course, on this with our expert, actually, on all things cool and new and shiny, Matthias Lundgren. He was co-founder of Atomico, one of Europe's top venture funds, and founder of Moonfire Ventures. Matthias has 20 years of experience investing in the European tech space. Matthias, as always, thank you so much for joining us. I have a lot of questions on what we should be looking at as the next thing to be invested in tech. But first of all, we have this new variant. Markets are falling out of bed. Is that actually supportive about some of the tech stocks that we would use more in lockdown at home?
Well, definitely that's what happened last time, right? So people spent more time at home. We started getting engaged more into gaming, things like that you can do from your home. And of course, the whole world of living in the Zoom world, that all happened during this period. So tech works very well in these types of environments and should continue to thrive.
Yeah, and one of the things that I know you're very involved in is, for example, looking at the gaming market, the global gaming market. And I try and follow it, but I was surprised by this figure, is now worth $180 billion in revenue. Is it going to increase more? And so what kind of companies are you looking at to be the next big thing?
Yeah, no, the gaming market is just incredible. It's a real powerhouse, and I think it always is a little bit overlooked. But it's huge and it's growing fast, still double digits. But I think, to me, what's really exciting within the gaming space is the crypto gaming. And I think that's kind of a new world that's going to be just basically redefine everything we thought about gaming. And so we've seen that grown dramatically. So up from 42 million last year invested in this space to 2 billion to date this year. So it's a 50x increase. But in general, let's say the crypto space has grown quite a lot as well, where we have 64 unicorns in crypto, but 39 of them came just this year.
Matthias, first of all, what's the valuation on some of these crypto unicorns? So when you talk about gaming and crypto, how will this evolve? So if you look at the platforms and business models, how will they shift in the next 4 to 5 years?
Yeah, so if you look at companies, within the crypto gaming space, they're really embracing the concept of 3.0, Web 3.0, that is. And so before, when you used to play games, you used to basically have things like your cosmetics, your different components, your skins. These are things that you owned and you nurtured during playing a game. With crypto gaming, you can actually own these things. You have really true ownership. Mm-hmm. And that is coming through something that's pretty powerful, which is NFTs. They allow you to sort of continue to own something. And what's cool about it is that they're finite. This means that there's only going to be so many of them. So if there is a creation of a sword or whatever else it is, there's only be so many of them. And then there's a possibility of you being able to use them in multiple and different games. So suddenly this becomes real value, true ownership for the player. And I think that's totally redefining what games are about. And we're seeing exciting things. Like you have companies like Axie Infinity growing at pace and looking at doing 2.4 billion in revenue this year, really from nothing last year. So the space is growing really fast, and the new models are super exciting. And we've invested in a few exciting companies in the sporting space and so on.
So Matthias, so if you look at, for example, the blockchain gaming, so it does allow, I guess, organic growth in gaming economies where you can also pay gamers to play. Is there, a part of the world that's better at making this transition? And is this, 5 years down the line, or will there be significant change that will take longer? Like, what's the pace of change you're looking at?
Yeah, I think that's a really good question. The pace of change right now is enormous. So crypto gaming, this is not something that was invented this year. It actually happened 4 or 5 years ago with the sort of creation of NFTs, and you had a game that became quite popular called CryptoKitties. But the infrastructure took time to sort of come together. Now we're seeing that the new sort of infrastructure layer is becoming so much more powerful. You're allowing things like games to be able to play at another level. So I think this is something you need to look out at for the next 5 to 10 years. But you're going to see incredible movements even through that period. And I think it's hard for us to sort of really say what exactly is going to happen. But what you have to imagine is that the world of games, and maybe even the world of the digital world, everything that you had there was like renting it, because it all depended on whether your relationship, let's say with Facebook, or your relationship with any game that you were playing that owned that component of the platform. Today, you are the owner of it. So finally, when you have that car, whatever it's your Ferrari in the digital world, it is yours. You can bring it with you. You can have it. And it's a very different mind shift. And I think that's what's so exciting about the space.
So, Matthias, first of all, how does NFT fit in all of this? But also, if they dwarf some of the older models, who has the most to lose?
Yeah, so that's a really interesting question. So, will these big platforms be the places of the future? And I think what's going to happen is that they're going to continue. Like today, you see Microsoft is still an important player in the market. But you have had the advent of new companies like Facebook and Google and Netflix and whatever else, right? But I think what you're going to see is that maybe their dominance and their position might be very different over the long term, because you have the ability of these new entities coming up. And so I think that many of these are going to be challenged because it's on a new platform. You don't necessarily even need to be using those platforms to make these things happen. So you don't need to be, when you're playing a game, you don't play it on Apple or Android. You're playing it through another system where you're buying the goods. So they're not getting part of that transaction.
I guess the concern with crypto gaming, though, is the ESG cost of all of this. So, how do you address it? And is that what could hold it back, or is there a company that could step in and make it greener?
Yeah, no, so I think that this is, again, it's a new beginning, and there's some great technologies out there that are being developed. And so the costs of doing these things are actually going down because of the innovation. So I think that these are just sort of quirks and issues and problems that we have. But going forward, it's going to become easier and easier. And overall, I think actually the digital space is, let's say, comparing it to the industrial world, it's obviously a lot more green. So I think give it time and allow us to have a little bit more innovation happening here, because this is the beginning. We can't forget that. This is like, we have to sort of, if we go back in time, this is a little bit like us looking at at websites and thinking of them as brochures. And today, as you know, a website is a lot more than that.
Yeah. Matthias, thank you so much, as always, for making us a lot smarter in some of these spaces. Matthias Lundgren, they're founder of Moonfire Ventures. Now, in the meantime, we're still seeing this huge sell-off in the markets that's not actually, slowing down at all. It's still being exacerbated or being fueled by some of the concerns about this new variant. We know very little about the variant. We don't know whether it's more lethal. We don't know whether it spreads easier, but certainly the market reaction is quite intense. Remember, this could also be because of liquidity. It is the day after Thanksgiving, so a lot of traders actually took the last couple of days off. If you look at the markets overall, U.S. futures sliding, European stocks down, treasuries, German bonds, yen all rising, and then the South African rand and other emerging markets are also sliding. So there's a clear trader, move flocking to havens and investor dumping some of the riskier assets. You can see crude oil, for example, WTI at 73.06, down almost 7%. Coming up, more European countries ban travel from South Africa due to the new COVID variant. We'll speak to the country's Minister for Public Enterprise, Pravin Gordhan. Send in your questions on IB Plus TV Go. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, it's the day after Thanksgiving. A lot of traders would have hoped for a sleepy trading day. I mean, it's the complete opposite we've been getting over the last 17 hours. Pretty big moves that we've seen, and they're not getting any better or any slower. Now, overall, there's a move from investors dumping risk assets, flocking into havens. This is as a new variant of the coronavirus made its presence known in global markets. If you look at stocks across the world, U.S. futures down, treasuries, German bonds, and the yen rising. So if you look at some of the things that we know, authorities around the world have been quick to act against this variant. Researchers, though, have yet to determine whether it's more transmissible or whether it's more lethal than previous ones. Well, we're delighted to be joined about the virus, but also a lot more about what's also going on in South Africa from a company point of view by the Minister for Public Enterprises, Pravin Gordhan. Minister, thank you so much for joining us. This is, a pretty ugly day on the markets overall. When we try and understand what the variant is, South Africa is really at the forefront of trying to understand and sequencing what we know. What information do you have that could make us, help us make an informed decision on what we could be dealing with next?
Good morning, Francine, and thank you for having me. Well, as you correctly put it, the scientists in South Africa have certainly been at the forefront of working out the sequencing of the genes on these viruses. Secondly, they've indicated that there is a new variant around. Thirdly, as you indicated, it's a bit early for them to decide whether it's more transmissible or whether it will evade and escape the vaccines that are currently available. But I'm sure that in the next 10 days or so, as there's more clarity after a bit more work and more discoveries elsewhere in the world about whether this particular variant has been seen other than in Hong Kong, Botswana, and South Africa, the extent to which it has spread across the world as well. So I suppose there will be a period of uncertainty, which is being reflected in the markets at the moment.
But, Minister, and really there's a huge lack of information, and yet the UK, Israel, and other countries have temporarily banned, flights from South Africa and 5 neighboring countries as precautionary measures. Do you think they were too quick to act?
Definitely. On the one hand, we say scientifically that there isn't enough information, that we're waiting for more clarity on issues of transmissibility. And the UK once again responds in the way it has done so in the past, where it thought that the Delta virus was unique to certain countries, when in its own backyard in Kent, there was the gamma virus that was actually developing. But secondly, I think we need to see this as a global issue, pretty much like climate change itself, and that these variants are going to spread. And nobody has an answer as to whether there will be newer variants, particularly in a context where vaccines are not universally available, particularly on the African continent, but elsewhere as well. So the vaccine divide has a major impact on these issues as we go on, and how long this pandemic will last.
Minister, how much more pressure are you actually expecting on the South African economy? I know there are a number of questions that I want to ask you about reorganizing Eskom, about what happens, for example, to SAA. Is there a danger that actually this gets pushed to one side as you have to deal with this new variant?
But those are matters, I think, in the next few days that government will apply its mind to. Secondly, obviously, we've learned a lot of lessons from the first few waves, so to speak, that we've been through and the rest of the world has been through. And thirdly, the balance between lives and livelihoods is one that has to be carefully managed. And those are some lessons that we've learned from the past as well. So I think we'll have a clearer idea next week and in the weeks ahead as to how we manage this particular period. In the Northern Hemisphere, you're going through your winter. In the Southern Hemisphere, we're going through our summer. And the summer holidays are going to themselves create movement of people on the one hand, but also gatherings that could pose risks as well. And all of these will have to be managed both with non-pharmaceuticals on the one hand, but for riskier people, the Minister of Health has indicated that from the 30th of November, an extra dose of both J&J and Pfizer vaccine would be available.
Minister, one of the questions that I wanted to ask you was, of course, the state of play with regard with the sale of the stake in the South African Airways. I mean, does this, complicate that matter further? Like, where are we on that?
Well, that's still going through certain legal processes, but the sale is certainly moving in the right direction. And we were hoping that by the end of the year, some of the decision-making would have actually happened, and that's still possible. And there's a few more regulatory hoops that we have to jump through. So early in the new year, that process should be completed, which is quite an important one for South Africa, where previous state-owned asset is now going to be privately owned to the extent of 51%, with government holding a 49% shareholding. But that should be on its way. Aviation has also, I'm sure, learned its lessons through the different waves of the pandemic. And we will see how that impacts on aviation globally as well.
Minister, had the price been agreed actually with the buyers for the stake? And do you worry that, with the resurgence of this virus that is putting a pressure on airlines, certainly today, I don't know for how long for, that price could be even lower than you had negotiated?
The price is actually based on the fact that the SAA has just come out of business rescue on the one hand, but more clearly on a valuation of assets. And that valuation should persist as we go through this particular period that I have outlined. So I don't expect that there will be any negative impact on the price.
Minister, how long do you expect power shortages to persist? And are you any closer to actually reorganizing Eskom's debt and bringing it to a more sustainable level?
Well, that's the big one. That's 400 billion rands worth of debt. Eskom, in the first instance, during the course of the past year, has been able to use certain market conditions and help from the Treasury to reduce the debt from about 480 billion rands down to 400 billion rands. So that's the first good move. Secondly, the restructuring of Eskom is reaching a point where the separation of generation, transmission, and distribution is likely to take place fairly soon. Thirdly, that'll give us a much better idea of valuations of each of the three entities. And then we'll have to work out how we attribute debt to each of those different entities and then resolve the remaining amount.
But, Minister, do you think the government will take over part of the debt?
That's the big decision that the Minister of Finance will have to make between now and February next year.
And your gut feeling, are you leaning, do you think he's leaning in a certain direction?
Well, I mean, look, it's very clear to all of us that South Africa is facing serious fiscal constraints as a result of the pandemic, and its intention to support, as I said, lives and livelihoods over the past year or so. So those constraints are likely to be there given the possibilities of the new variant having some negative impact. And all of that will have to be taken into consideration by government as we get into the next 6 weeks after the holidays.
Do you think the CEO has to quit of Eskom, or does he have your full backing?
Oh, he has my 150% backing. Eskom is an entity that has gone through a difficult time, and the challenges in Eskom are not easy ones, given the problems that we've had with corruption and what we call state capture in South Africa. So on the one hand, it's got to recover from its past. On the other hand, it's got to ensure that its current operations happen efficiently. And then thirdly, it needs to prepare for a future, both in terms of the restructuring of Eskom, but also in terms of the impact of climate change and renewable and other types of energy coming onto the grid as well. So it's a formidable period that we're going to go through over the next few years that has to be led properly, both by the board and the CEO and his management team. And in fact, we need to take extra measures to give him the support that he requires.
Minister, before I let you go, I just want to go back to this new variant as we try and understand exactly, who it's impacting. And we don't know whether it's, it spreads more or it's more deadly. But I think you found 90% of the new cases are because of this variant. Can you tell us a little bit of what the thinking is on how many people ended up in hospital? Like, given what we know now, that's very little. What did you see?
At the moment, in the last week or so, our Minister of Health has indicated that there has been a slight, not slight, but a significant jump in the number of infections that have been detected. And that positivity rate has increased from below 1% to around 5% or so. But those numbers are very early numbers. Hospitalization hasn't quite begun to take off yet. And if you are vaccinated, as you know, there is the extra protection that you have from serious health issues being impacting on one individual or any individual, and that will be helpful as well. So the key is still access to vaccines, which South Africa has now. Second is to have the majority of the population vaccinated so that they have this extra layer of protection. And thirdly, it's a better understanding of the variant as we go on.
Minister, thank you so much for your time today. Pravin Gordhan, their South African Minister for Public Enterprises. Now, we'll have plenty more, of course, on what we know and we don't know about the variant shortly. This is Bloomberg.
We've definitely seen some signs of euphoria and some signs of risk in the short term.
You need to rebuild stocks, but we're not at that point where stocks are at a comfortable level.
The supply channels are not going to rectify themselves quickly, and there's a chance that we've actually seen some over-ordering along the supply chain.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It is 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. New threat, stocks, treasury yields and oil sink as a new virus variant discovered in South Africa sends a wave of caution across global markets. Flight risk. A number of governments around the world move to tighten restrictions on travel from countries in southern Africa. And Black Friday is here, but will the new virus variant add to a growing list of holiday headwinds? A very good morning, everybody. I'm Anna Edwards, live in London with Tom McKenzie. Kailey Leinz is with us in New York. Matt Miller is off this week. And Kailey, we interrupt your Thanksgiving with news of another virus variant, and this one seems to certainly have sent risk assets into a tailspin.
Yeah, Black Friday has turned into a decisively red Friday, Anna. You really saw that evident in the Asian session overnight, and you're seeing follow through in Europe and when it comes to U.S. futures. Now, as for how the picture looks in Asia, the GMM function on the Bloomberg terminal shows a really beautiful picture of it. For our listeners on radio, basically all you need to know is that in the equities column, it is straight red, and we actually have a number of benchmarks that moved 3 to 5 standard deviations to the downside. In Hong Kong, for example, stocks were off more than 2.5%. In foreign exchange, most currencies are also weaker against the dollar, the one exception being the Japanese yen, getting a big safe haven bid today. It is stronger against the U.S. dollar by 1.1%. You are also seeing a bid coming into safe haven bonds really across the Asia Pacific. In Australia, for example, the 10-year yield down 13 basis points overnight, while commodities across the board are getting hit because the new virus variant is raising some concerns about demand. Now, as for the picture here in the U.S., it is very similar. 4.5 hours to go until the opening bell, and right now S&P 500 futures are down 1.8%. You are seeing that similar bid coming into the Treasury market. The 10-year yield down 11 basis points. We're sitting at sub 152 right now. Oil, one of those commodities getting hit hard. WTI crude is down 6.5%. Right now we're trading down at $73.25 a barrel. And then Bitcoin has been trading pretty much in tandem with other risk assets, so it is getting hit by that broader risk-off tone today, Tom. Bitcoin right now down almost 7%. We're trading sub $55,000.
Yeah, just a reminder that cryptocurrency is no safe haven in this kind of environment. Even if investors a few months back might have thought that Bitcoin is a place you might have wanted to be when risk is prevailing. Here's what's happening across the European space then. This pressure is extreme. You're seeing falls of almost 3% across Germany. The CAC 40 is one of the worst performing major indexes, down 3.3%. Here in the UK, losses of 2.8%. Broad-based selling. But we can switch it up and see how things are bearing out in terms of that work from home and reopening play that is being accentuated here. Some of the stocks, of course, are gaining on the back of this. HelloFresh is a food delivery company, up 3%. Ocado, also in the food delivery space, gaining 1% as well on bets that this is a space that will benefit as the concerns about this new variant continue to rise. And of course, in the Eurozone, looking at lockdowns already prior to this latest variant. IAG, though, this is the flip side of this trade, down almost 11%. This is the owner, of course, of British Airways. Ryanair also lower by 7%. Governments around the world putting in place curbs and restrictions on South Africa and countries around it. Eurodollar currently at 112, and the bid in terms of treasuries from the riskiest to the least risky, the German Bund 6 basis points lower, and the Italian BTPs also lower as well as investors move into these safe havens. Spot gold gaining 1% at 1,800.
Yeah, really interesting to see the downdraft that we're seeing when it comes to equity markets, but specifically around travel and leisure, but actually bouncing off their lows of earlier, Tom. And the banking sector here in Europe, now the worst performer, which is worth noting on a day like today as we gear up for US trading. Now we'll look at what lies ahead for us today. And as we mentioned in our headlines, and as we thought might dominate our conversation today, it is Black Friday, that shopping event in the United States and elsewhere. But deals are shaping up to be perhaps a little underwhelming. Discounts on sporting goods and appliances will be lower than last year amid tight inventories and rising inflation. People perhaps just glad to get their hands on stuff at whatever price. Now at 8 a.m. New York time, the Bank of England chief economist Hugh Pill will be speaking at the Confederation of British Industries conference on the economic outlook. He'll be closely watched ahead of December's rate decision from the BOE, and very close to where I am, a London tube drivers' strike is set to come into force, or already has, in fact, a 24-hour walkout affecting 5 lines and to varying degrees. This is after failing to resolve a scheduling dispute over the restoration of overnight services. But a lot of people work from home, so maybe some people care about that and some people not too affected. What we all want to hear from, though, or hear about, is the new variant of the coronavirus, first discovered in South Africa, in southern Africa. The World Health Organization is meeting at 6 a.m. New York time today to discuss the new COVID-19 variant. We will look for response after that. But what do we know about it already? What if anything, is justifying this real extreme risk aversion we're seeing in these markets? Now, Sam Fazeli, senior pharmaceuticals analyst for Bloomberg Intelligence, joins us now. Sam, what do we know and what do we crucially not know about this variant? Why are we seeing such a risk-off interpretation in markets?
Yeah, good morning, Anna. So I think the reaction is to the fact that often very level-headed scientists are raising their eyebrows at the state of the number of mutations in this variant, 32 to be exact, in the so-called spike protein, compared to 10 that we've got with Delta, Mu, or Beta. So that's what's worrying about it. And I think what South Africa is probably seeing, and I'm sure the data will continue to build over the next few days, is a very rapid rise in the prevalence of this variant. And so put that all together, people are now worrying that it would be even less responsive to vaccine or prior infection-induced immunity.
Yeah.
And that it will spread faster.
So, Sam, on that point, is there a correlation between the number of mutations and the efficacy of vaccinations against it?
Well, so Kailey, that's a really good question, but it's a lot more to do with where these mutations are. The spike protein is where the majority of the antibodies that are induced by vaccine, because that's what you get the spike sequence, and also the majority of antibodies that come from an infection are directed to. So if there's lots of mutations there, the thought is that that's possible, that therefore the antibodies won't be able to neutralize the virus. So that's where it comes from. There is no direct correlation. There are some mutations that are worse than others.
OK, Sam, thank you very much. And as you pointed out to me earlier on, there is no data on the severity of this new variant, and that's a crucial part of the puzzle still yet to be unearthed. Sam Fazeli, Senior Pharmaceuticals Analyst for Bloomberg Intelligence. And later this hour, we'll be speaking to Emma Hodcroft, Molecular Epidemiologist from the University of Bern, who has been dedicating herself of late, of course, as many scientists have, to the fight against COVID-19. Now, a number of governments around the world are moving to tighten restrictions on travel from countries in Southern Africa. So far, the European Union, the UK, Israel, Singapore, Japan have all placed emergency curbs on travel. Let's get more on this with Bloomberg's Maria Tadeo, who's with us. Maria, what is the state of the response that we've seen from European authorities? Because as we've just hearing from Sam, there's a lot we don't know still about this mutation, but European governments and others around the world reacting now just in case. Apologies. Seems we don't have Maria Tadeo. We will try and get back to her. But Kailey, the point I was making there, we don't know a lot, but we are seeing governments respond. You know, we have to wonder whether we'll see governments when everybody wakes up after Thanksgiving in the United States, whether we get any response from the US as well.
Yeah, it'll be interesting to see if President Biden has something to announce when he returns from up north where he's been spending the holiday. Now, speaking of holidays, it is the start of the holiday shopping season, really crunch time for US retailers as masses of shoppers return to in-person shopping for Black Friday. But this new virus variant adds to a long list of concerns facing the retail industry. For more, let's get on over to Bloomberg's Ritika Gupta. So Ritika, what are we expecting today and really from the broader holiday period?
Yeah, Kailey, well, data from the US and Europe does show that foot traffic in stores is slightly up from a year ago, but of course this new COVID variant could put some of that into disarray. But if you're expecting your traditional Black Friday deals today, you may want to think again. Because
so Ritika, it seems like we're having a little bit of issues with your audio there, so we will get back to that in just a moment. For now, though, I think we can check Anna on Maria Tadeo, if she is available.
We can try. Let's try and do that. Or maybe we'll discuss some of these big markets moves amongst ourselves and await further instruction. I mean, the Stock 600, Kailey, just as we're waiting for US markets to get into their stride, of course, even though it is going to be a low volume session, it usually is, at least post-Thanksgiving. So we do need to bear that in mind. We do have European equity markets down by 2.5%, so keep that in mind. But off lows that we saw earlier, if that's any kind of silver lining. Now, you're right, Kailey, we can get to Maria Tadeo, who's been keeping across the government response to this latest variant, first identified in Southern Africa. Maria, give us a rundown of how the European governments have responded to this, because they've been busy enough with the COVID fight up to this point, with the fourth wave of the Delta variant. But tell us what kind of early responses we're seeing now to the new variant coming out of Southern Africa.
Well, Anna, you're going to see Germany, of course, Austria, Italy, and I guess by the end of the day, many more European governments decided that they are going to block travel from countries where this new variant has been identified. And I was on the phone this morning with actually a very senior European official, and I asked him, how serious do you think this is? And this is just minutes after the recommendation to block travel came out, and he said, It's actually very serious, and we're going to take no chances. So a lot of this, we'll have to wait and see whether or not this was a panic reaction, whether this was a knee-jerk reaction. But the impression that I got is at this point, the numbers that they're looking at and they're facing for this winter are already worrisome enough that they just decided to go nuclear and kind of just ban everything.
Yeah, and of course, Maria, this is a nod to that. There is already this deep concern in Germany about the level of cases. You add on to that the new variant, the steps being taken by the government, and they're not ruling out, the German coalition, the new coalition, at least health ministers, the current health minister, not ruling out a potential lockdown.
Yeah, and at the start of this week, there was a meeting behind the closed doors in Germany with the CDU and Angela Merkel, who, as you know, is leaving. And essentially, she said the situation is now set to be very serious, and some of the numbers that they're looking at is potentially cases doubling in the space of 14 days. We know that in some regions in Germany already, hospitals are reaching over capacity. We're looking at Saxony, Bavaria, and so on, facing very quick, fast infections. So looking at what is still a very complicated domestic picture, potentially more restrictions to come, they've decided we don't want to take any external chances at this point until the situation calms down, and then we see what we do.
All right, Bloomberg's Maria Tadeo, thank you so much. And now I want to get back to the markets and take a look at some stocks moving in pre-market trading here in the U.S. One unrelated to this broader macro theme of the virus that we're talking about is Didi Global. This is, of course, a Chinese ride-hailing company that is listed in the U.S., but if China has its way, it may not be for much longer. Bloomberg reporting overnight that Chinese regulators have asked executives of Didi to delist the company from the New York Stock Exchange. And as a result, those shares are down the better part of 7% before the bell. And of course, as Maria was alluding to, we have a lot of travel restrictions going back into place, specifically as it relates to Southern Africa. And as a result, travel stocks really across the board are getting hit hard. Cruise lines, the likes of Carnival or Norwegian, down 9% and 8% respectively. And you're seeing airlines broadly lower as well. Delta and United Airlines each down more than 6%, Anna.
Yeah, absolutely. And we have an echo of that here in Europe with some of the travel and leisure stocks also being hit. Broadly, we are, as I said earlier, just off our lows, but we're still down by 2.5% on the Stoxx 600. We have some heavyweight names, the likes of Airbus, down earlier on this morning by more than 10%. And that's really going to take the edge off the CAC 40 as we watch Paris. So global markets really responding to nervousness and a lack of data in many cases around this new COVID variant first detected in Southern Africa. More on the markets next. This is Bloomberg.
Welcome back. This is Bloomberg Surveillance Early Edition. I'm Tom McKenzie alongside Anna Edwards here in London, Kailey Leinz in New York. The pronounced COVID-induced selling continues, has been sustained across the European space, down more than 2.4% across the European Stoxx 600. The futures in the US pointing to losses of 1.7%, and the bid for safe havens, the Swissy, the yen and gold all pronounced. Treasuries as well, yields significantly lower. Let's unpack all of the market action then with Eddie van der Walt of Bloomberg M Live. What a day, Eddie. I just need to pause to take a deep breath there. We've been covering this for the last few hours. What do you make of the market reaction? Is it an overreaction given, as Anna's been pointing out, there is a lack of data about this new variant? The WHO says it may take 1 to 2 weeks before we know how dangerous this new Southern African variant really is.
You know, I went to bed last night. It was all calm. It was all good. You know, Thanksgiving.
Happy Thanksgiving.
Yeah, absolutely. And I woke up and it was all systems go, right? And I was really glad that I got to the office early this morning because, you know, the markets are really reacting to this. And there is a sense in which, you know, we've had variants before, as you say. You know, this one is a little bit different. If you look at Sam Fazeli's piece earlier today from Bloomberg Intelligence, it's really smart, tells you exactly why it is that people are so worried about this. But that being said, we've had variants before. We've not had this kind of market reaction since the early days, right, on news of a new variant. I think there's a sense that markets had a really big run-up and that people were... There was a little bit of a, you know, looking for a reason to sell. We've seen that hedging activity has been picking up in the stock market anyway ahead of this. But it's really interesting to see where exactly people are looking for havens, to your point.
Yes, and let me ask you about that, because, of course, the playbook says you get out of equities, you get into safer currencies, you get into bonds, and you get into, in particular, out of travel and leisure stocks, and get out of oil. And we're seeing all of that play out here. But interestingly, in the bond markets, we are seeing them acting as a haven, and we're seeing the markets effectively unwind some of their bets on Fed tightening here.
Yeah.
Does that make sense? Is that a bit of an overreaction, or we just can't say so markets are taking a cautious path?
You know, to me, that's one of the big indicators that markets were looking for a reason to reprice a few things anyway, because the bond market had got ahead of itself a lot on, on pricing rate hikes, particularly from the ECB and other places, right? And there was pushback from policymakers saying you're too aggressive. And I think now at this stage, now just where we see this pullback, I think we get that broad-based repricing across markets. For me, what is interesting is that we're not getting that big dollar bid. And the dollar bid has been...
Getting a euro bid.
We're getting a euro bid. It's really odd. Really, what I've come to expect to see on these big sell-offs is a dollar bid and gold selling off in the early phases, and we're not seeing that this time around.
Well, something we are seeing in this sell-off, Eddie, is oil is getting hit incredibly hard. When you have this concern on the demand side, plus on the supply side, you have countries, including the U.S., releasing oil from their strategic petroleum reserves. How does that all add up, the equation for OPEC plus?
Yeah, the oil move is the one that really makes sense in this environment because, oil, if people aren't going to fly, if people aren't going to move, if we're going to see more broad-based lockdowns being put into place, regardless of what the data later on the virus says, what we know now is that we are seeing additional travel restrictions. If people don't move, it hurts oil prices. We saw that last year when WTI went negative. Now, we're a long way from that. Nobody's saying we're going to go negative on oil at these prices. But, I think it's a real headwind for OPEC, and OPEC already facing headwinds across the board. So I don't think we're seeing OPEC taking action to cut back on.
OK, Eddie, thank you very much. We'll look ahead to next week and that meeting. Eddie van der Veld joining us there from Bloomberg's Markets Live team. Thank you very much. A quick check on those markets then. European equity markets still under pressure, down by 2.5%. US futures, E-minis, Dow futures, NASDAQ futures all point to the downside, more than 1.5% on two of those. NASDAQ futures down by 1.2%, so a little bit cushioned there by, of course, the lockdown economy. We see money going into bond markets. We see money coming out of oil. The Brent price at $78 is the handle there, down by 5% in just this morning's trade. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz in New York with Anna Edwards and Tom McKenzie in London. Now let's get the first word news. And oil is falling today as a new COVID-19 strain raises concerns about the outlook for demand. The drop comes ahead of a key OPEC Plus meeting to decide production policy for January. The group has been under pressure from the U.S. and other consuming nations who tap strategic stockpiles to tame rising energy prices this week. In Russia, those close to the Kremlin say President Vladimir Putin doesn't want to start another war in Ukraine, but would fight if necessary in order to stop the creeping expansion of NATO there. People close to leadership say the Kremlin knows any attempt to occupy large amounts of Ukrainian territory militarily would face widespread public opposition and trigger potentially crippling sanctions from the West. The list of countries banning flights from South Africa and 5 neighboring countries is growing over worries about a new COVID-19 variant. The UK is placing the 6 nations on its red list, requiring travelers to quarantine in hotels upon arrival. Scientists are still trying to determine whether the new variant is more transmissible or more lethal than the previous ones. Meanwhile, Hong Kong has confirmed it's found 2 cases of the new variant in travelers who arrived in the city. And China is said to have asked Didi Global to delist from its U.S. bourses over security fears. Our sources say tech regulators want the ride-hailers management to take the company off the New York Stock Exchange because of concerns about leaking sensitive data. We're told Didi has been ordered to work out precise details for the delisting, with privatization or a Hong Kong share float both under consideration. So, Tom, this saga with Didi has been drawn on for some time now, but this action, according to our reporting, would be among the most severe.
It would, and I would remember that when Didi vanquished Uber in China, and this was the Chinese champion beating back Uber that had spent something like $1 billion every single year to try and carve out market share. Now they are clipping the wings once again at Didi. Interestingly, the privatization may involve state-backed companies as well. So ultimately, you could see the government taking over Didi. We'll see how it plays out.
Yeah, indeed. And is this going to result in a delisting, or is it just going to result in another listing? That's something that's also being talked about here. But it's an interesting one that on a day where we're very much focused elsewhere, the market's focus is on selling risk assets because of concerns around COVID-19 and the latest variant of that. What will we see in terms of tech reaction to this? Because this is another preoccupation for markets, but does it get kind of pushed to the side because of our overriding concerns around COVID? And transportation would be part of that concern, of course. Coming up on this programme, more on that new variant with Emma Hodcroft, molecular epidemiologist from the University of Bern. We know a lot about these mutations, 32 of them, we're told by our colleague Sam Fazeli, and that's what makes people worried. It makes people concerned about transmittability and also around the vaccine effectiveness. But what do we know about severity of disease? Not very much. We'll get the latest from Emma shortly. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards with Tom McKenzie in London and Kailey Leinz in New York. Matt Miller is off this week. And Tom, we're just getting some lines coming through from the World Health Organization. We know that meetings are taking place, of course, at the WHO around the new variant, the new one first identified in South Africa. It doesn't have a name yet. They're going to decide how to categorize it and give it a name if it needs one. But they're saying that it will take several weeks to determine the impact of the variant. And that gives investors something to think about, doesn't it? Because it's one thing to sell off to this extent whilst you're waiting for some information that'll come in a couple of hours, but where do we go for a couple of weeks?
As you hold off and wait for that data, we know that it has 32 mutations. Sam Fazeli has pointed it out, more mutations than any of the other variants, so that has some implications. And we know that within that area of Johannesburg, South African officials have said that it now accounts for 90% of cases. But just how dangerous this is still remains unknown. It seems we're going to have to wait.
Yeah, absolutely. Kailey, what are you looking at across these markets then ahead of the start of US trading? Of course, a lot of companies within the travel and leisure sector are going to be hit hard, although worth pointing out that it's also the banking sector being hit hard here in Europe as well.
Basically, stocks across the board are getting hit hard, Anna. As you point out correctly, a lot of things are still uncertain when it comes to this variant, but if there's one thing we know, it is that the market hates uncertainty, and that is definitely showing up in equities today, down across the board in Europe. Yes, we are off of the session lows, but still, the travel and leisure sector, as you were alluding to, travel getting hit hard, down the better part of 5%. And here in the U.S., with 4 hours to go until the opening bell, S&P 500 futures down 1.7% at this moment in time. You are seeing a bid coming into the safe haven treasury market. The 10-year yield is down 10 basis points. We are south of 153. And oil also getting hit incredibly hard. There's a lot of concern now about what the demand picture will look like if people are not indeed traveling. Right now, WTI crude is down more than 6.5%. We're trading at $73.24 a barrel. Now, as for the individual equity movers in pre-market trading, there are decisive COVID-related losers and COVID-related winners. On the losing side, travel, as I mentioned, Royal Caribbean is down the better part of 10%, and you're also seeing a lot of the energy complex under pressure. Apache, for example, down 7%. But on the winning side, those traditional stay-at-home players are getting a nice bid today. Zoom Video is up 8.5%, and Peloton is up the better part of 6%, Anna.
Kailey, let's get back to our top story, which, of course, is around COVID-19 and the latest variant that is rocking global markets, as Kailey has just set out for us. South Africa's Minister for Public Enterprises and former Finance Minister, Pravin Gordhan, expects more clarity on the variant in the next 10 days.
I'm sure that in the next 10 days or so, as there's more clarity after a bit more work and more discoveries elsewhere in the world, about whether this particular variant has been seen other than in Hong Kong, Botswana and South Africa. So I suppose there will be a period of uncertainty, which is being reflected in the markets at the moment.
The minister, as I mentioned, from South Africa, and of course relevant because that is where this has first been discovered, first identified. Emma Hodcroft joins us now, molecular epidemiologist, at the University of Bern, and you've dedicated a lot of time in recent years, Emma, I know, to like many scientists, the fight against COVID-19. So there's a lot we know and a lot we don't know here. Can I start with the transmittability, or the spread rather, of this variant so far? So we know it's in some countries in Southern Africa. We know it's in Hong Kong. I think I saw cases of it elsewhere as well, at least in one other country. Can we assume it is much further spread than we've already identified? Are we always playing catch-up with this virus?
Unfortunately, that's very often the case. When it comes to these variants, by the time that they've spread enough that they start being detected by surveillance systems, they're usually more widespread than we think from those first few samples. And we'll probably hear in the next few days that it's been detected in a few more countries. Of course, there's a big difference between having a few cases in other countries around the world and having widespread transmission. And that'll be what we start to pick up in the next few days, how many times it's been exported and whether it's transmitting locally. I think it's really hard to say right now whether this new variant is much more transmissible or maybe just a little bit. One thing to keep in mind is that cases have actually been pretty low recently in South Africa, which means this variant may not have had to directly compete against Delta. We'll, of course, be learning more about this in the next few days and figuring out whether this does seem to be something that's comparable to Delta in transmissibility, or whether it might be more on the immune evasion that's the concern and that it might not be more transmissible. This is what we have to wait for more data to know.
So that's what we have to wait for more data on. We also heard from the World Health Organization. They say it will take several weeks to determine the impact of the variant. There's the transmittability, but there's also the severity of the disease that is caused, Emma. Do we know anything about that yet?
Unfortunately, we don't. Even though there's been a few hundred people identified in South Africa that have this variant, this is data that's just coming in new. And for a lot of people, of course, coronavirus is not that dangerous. They don't have very severe symptoms. They may be asymptomatic, especially if they're young. And so we have to keep this in mind. This is why it can be difficult to say. If this has spread, perhaps particularly among a group of young individuals, that may not tell us a lot about whether this is a threat, for example, to people with existing conditions or to older people. This is why we often have to wait for larger data points before we can really tell if there's a different clinical outcome.
Emma, you're a scientist, so were you surprised at all by this, given some of the vaccination inequity between places like South Africa and the Western world?
I do think this is a really important point to talk about right now. The total vaccine coverage for people who've had both jabs in South Africa is only about 28%. That's much, much lower than even some of the worst vaccinating countries in Europe. And this does mean that the virus has new opportunities. For the virus to make new variants, it has to be able to spread and transmit. The lower we keep that transmission, the less chance we have of seeing dangerous new mutations. And so I think we do have to talk about, while we have this vaccine inequity around the world, you know, are we opening the door and giving the virus the opportunity to discover these new variants? And could we be preventing this by making stronger efforts to get vaccines out to countries like South Africa?
Of the vaccinations we have now, though, as the virus is allowed to mutate into more and more different forms, will those vaccines become less effective?
This is the question that I think everyone is really concerned about. One thing I really want to emphasize is that it's incredibly rare that we have some mutations that make a vaccine completely useless. That's something that we generally don't see. It's more a question of, do the vaccines become slightly less effective? Similar to what we've seen with the immune waning, for example, in people that had their second vaccine 6 or more months ago. So I really want to emphasize that it's very unlikely the vaccine will stop working entirely, and the vaccine will still probably give you a considerable amount of protection. It's more about whether that protection is decreased enough that it's really concerning, and whether, for example, we need a new formulation vaccine booster to get that protection up to where we like it to be high in the 90s. But even 60, 70% protection is better than nothing.
Emma, we've seen these curbs on travel. What is an appropriate policy response at this stage, given what we know, and importantly, what we don't know about this variant?
This is a really tough question. As a lot of people have been saying today, the tough thing about travel restrictions is that particularly for less well-developed countries, they just don't seem to work as well. My screen froze.
OK, we can still hear you, Emma. So you're talking about how some of these measures work better than others and the complexity for governments. It seems like we've had some technical problems. We have lost Emma, but she was giving some really important insights in there. And also some, well, Emma's back. Emma, do you want to continue your thought?
Sorry, I was just saying that the problem with travel bans is that they can be really economically disruptive to low-income countries like South Africa and many other countries where we've seen new variants. What we don't want to do is to punish countries for sharing data, or else next time they see something worrying, they might say, well, we're just not going to tell anyone because it's so harmful for us. So if you do travel bans, I think one thing we have to remember is it might be too late. We might be better off making more action in our own countries to find it and stamp it out where we see it. But if we have them, we need to keep them as short as possible, and we need to make sure we're supporting the countries that recognize and that share this data with money, with support for surveillance, and with healthcare support as well, so that they will come back next time if they see something worrying again.
Emma, thank you so much. Thanks for joining us. Emma Hodcroft, molecular epidemiologist at the University of Bern. Some really interesting points, helping us get a sense of the scale, if you like, the size and scope of the threat we're dealing with at this point, and what we crucially don't know. Let's think about one of our other top stories today, and that is, of course, the fact that it is Black Friday. We're going to be speaking to Anita Balchandani, who is McKinsey & Co. partner, specialising in retail and other things beyond. We will talk to her shortly. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later on Wall Street Week, former U.S. Treasury Secretary Larry Summers. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz in New York with Anna Edwards and Tom McKenzie in London. Well, it's crunch time for U.S. retailers as masses of shoppers return to in-person shopping for Black Friday. But the new variant of COVID-19 adds to a long list of concerns facing the retail industry. For more, let's get to Bloomberg's Ritika Gupta. So, Ritika, let's try this again. What do we expect from not just Black Friday today, but really the rest of the holiday season?
Yeah, Kailey, well, data from the US and Europe is suggesting that foot traffic within those physical stores is actually slightly up from a year ago. But of course, this new COVID variant could put some of that into disarray going forward. But Kailey, if you're expecting some of those Black Friday deals that you're used to, you may want to think again, because Adobe is saying that even going into this Black Friday shopping period, a lot of those deals and some of those major categories are a lot shallower, from electronics, sporting goods, appliances, and in some categories like tools, you're actually getting no bargains at all. And this, of course, is at a time when the demand from the U.S. consumer is sky high, and Adobe are expecting we'll see about between $5.1 and $5.4 billion worth of sales. So that is a record. Now, if you combine that strong demand picture with some of those supply side issues, lower inventories and inflation, this is actually providing a once-in-a-lifetime opportunity for some of those retailers to scale back on some of those promotions. So this industry is making a big bet here that they can forego those promotions to offset inflation, and all the while not impacting consumer demand. So this is really their strategy here, and they're hoping that this is really going to protect their margins. But of course, this strategy, it may work this year, but we don't know about next year. Retailers, it's going to be difficult for them to forecast demand, and now with this COVID variant, that could also put things into disarray too.
Well, speaking of the margins, Ritika, we of course just had earnings from a number of retailers, and some were disappointing and some were actually doing okay. What causes the difference between them?
Yeah, Kailey, that's right. We have really seen this stark divergence in these earnings report between the haves and the have-nots. Those retailers that can weather the supply chains and those that couldn't. And you really see that reflected in the share price reaction. So the Gap and Nordstrom, those were really punished by investors after the earnings because they just couldn't take advantage of that strong consumer demand in the U.S. because of those higher costs, because of labor shortages, because of some of those supply side constraints, whether it's those factories in Vietnam being shut or the congestion at ports. And that was really hitting their margins. And that has really been the key buzzword in this earnings season. But of course, you had the likes of Home Depot, Lowe's, and even the department store Macy's, those being able to weather those supply chain issues a lot better. And so those performed a lot better after those earnings too.
Ritika, thank you very much. Ritika Gupta with the broad themes around Black Friday and also how the retailers have been doing, as we've heard from them recently. Let's continue this conversation. We're joined now by Anita Balchandani, who is McKinsey & Co. partner and tracks this sector really closely. Anita, really good to speak to you. Do we have a bit of a sort of problem with the concept of Black Friday this year? It's sort of designed to get bargains and deals and money off. And actually, a lot of people this year have been prepared to pay up for availability and actually getting your hands on the things you really want. That's more the problem at this point.
No, that's exactly right. And this is a very different and unique Black Friday. And there are a few things that make it unique. One, holiday spend has been pulled forward. So our research suggests that 50% of consumers had conducted almost half of their holiday shopping in October.
OK, I'm late.
So, absolutely. So it's clearly happened earlier, and that's driven really by supply chain challenges, so concerns around availability, shipping and fulfillment promise. Also, quite frankly, due to uncertainties around COVID-19 and how it might play back through the rest of the year. But finally, there's also been, in some consumer segments, actually a huge amount of excitement looking forward to celebrating the holiday season with friends and family. So all of that has meant that Black Friday has come earlier in a sense.
OK.
But also combined with that, you're exactly right, we're seeing promotional intensity. So number of items on sale across the globe reduced compared to historical years. And the level of discounts, particularly in US and China, where the recovery post the pandemic has probably been most buoyant, are definitely at the lowest levels that we've seen.
And Anita, we've spent a lot of this programme thinking about the new variant of COVID-19, first discovered in Southern Africa and now being examined by the World Health Organization. This is coming a little late in the day for consumers in the United States or globally, because these Black Friday deals do to some extent spread to other parts of the world, of course, and certainly here in the UK. Does that come too late to influence consumers' thinking? And will it continue to influence their thinking as we get closer to Christmas, maybe, and the holidays, maybe suggesting I'm not going to spend as much because I don't really know what's going to happen next year?
So look, so far what we've been seeing is, on the one hand, it's definitely an omni-channel Christmas, right? So social media has become the new shopping window. We're also seeing that online participation continuing to hold at the levels that we saw last year, combined with, so far, the trajectory has been for traffic to stores to also be on the rise. Now, clearly, variants and concerns around safety may change a bit of the picture around that, and we could therefore see a more intense shift back to online. But the reality is, so far, we were certainly looking at discretionary spending and holiday spending being up versus both 2019 and 2020, and on a trajectory there where online and stores were progressing well.
Where does it take us into 2022 in terms of the consumer strength and that continued demand? Does it hold up, do you think, given what you're seeing?
Look, what we're also seeing is that recovery is very uneven. And it varies by age segment, it varies by geography, and also levels of income. And so I think all of that is pointing towards an uneven recovery. However, what we're also seeing is fatigue in consumers who have actually been, held back on travel and many other forms of entertainment. So we have seen, the pent-up demand, also to some extent fueled by some of the savings that we entered this year with, that consumers entered this year with. So I think that's also resulting in consumers wanting to channel some of their spend into retail.
How much agility have you seen from retailers in terms of trying to match that demand? We know, of course, all those supply chain constraints. Many have been planning since late summer, we hear. And does it lead to structural changes within that ecosystem longer term?
Absolutely. Look, first and foremost, availability has been a key battleground, because what we see is consumers aren't willing to wait for items that are out of stock, and they're switching brands and retailers. So we've seen retailers and brands really up their game in terms of flexibility of supply chain, lead times, and really also how they think about buying in for bestsellers and so on. So we've seen a lot of agility on that front. Retailers have also aggressively ramped up online digital omni-channel capabilities, the ability to fulfill and ship from stores, and all of these, effectively initiatives which came about at the start of lockdowns, we believe mean that retailers and brands are better prepared to really deal and anticipate with some of these uncertainties.
There does seem to have been a step change, doesn't there? Certainly in some of the old bricks and mortar businesses, in the way that they can accommodate and play into the online channels these days. Let me ask you about the European experience here, because clearly, Black Friday started as quite a US phenomenon, but it has spread over to Europe. Is it a big deal in Europe these days? I mean, accepted all of the ways that it is different this year from other years. How is it doing as a concept?
So actually, Black Friday has caught on in Europe. If you look at just proportion of customers that intend to shop Black Friday, etc. What we're also seeing is it's the only region where the intensity of promotional discounts is actually up. Likely because actually if we look at the consumer recovery across US, China, the UK and Europe, probably Europe is lagging to some extent. So I think we're also definitely looking at, Europe participating in Black Friday.
OK, Anita, thank you very much. Thanks for joining us. Anita Balchandani, McKinsey & Co partner, to talk us through the latest on this year's Black Friday experience. And coming up later today, more on Black Friday with the CEO of Overstock.com. He'll be speaking to the team. This is Bloomberg. Welcome back. This is Bloomberg Surveillance Early Edition. We're bringing you live images from a press conference, the United Nations press conference taking place. The World Health Organization spokesman just speaking this morning and saying it's outstanding, talking about this new variant of COVID-19 that first emerged in southern Africa, saying it's outstanding how fast this variant has been identified. Giving us this new information, the variant was first identified on November the 11th, so it's now the 26th. We can see how quickly that has happened. The WHO panel, WHO panel will be considering whether, as it's known now, B11529 is a variant of concern. So they'll be looking to decide whether to give it that label, Tom. And of course, that then adds to our concern around it, I suppose. At the moment, there are a lot of things we simply don't know. And the World Health Organization has said that it will be examining and coming back. It'll take a few weeks, I think they said earlier on. But these markets are not waiting a few weeks, are they, to look on the gloomy side?
That's
We're now
right.
by 2.9% on Stock 600.
Yeah, the WHO says they're going to give governments guidance. Governments are already acting, of course, in terms of the travel curbs. You're seeing that play out in terms of the travel and leisure sector, very heavily hit. But there's blood across the board here, particularly when it comes to equities. As they are saying, Anna, down 3% on your Stock 600, almost 3%. And in terms of the moves to safe havens, the euro is bid, the yen is bid, the Swissy is bid, gold is up as well, and US Treasuries yields down across the belly of the curve.
Yeah, absolutely. And some of the sector breakdowns don't come as much of a surprise. We're seeing money going into some of those stay-at-home stocks. We talked earlier about the food delivery businesses that have been doing pretty well in today's session, but they really are standouts away from the trend, because the trend is very much to the downside. And to the downside, we have those travel and leisure stocks. We also have banks, though. That's also worth bearing in mind. We have the banking sector doing pretty badly today. In fact, the worst performing sector here in Europe is around the banking sector. So that's the sector breakdown. In terms of other flight to safety, Tom, we've seen money going into bond markets, going into the German Bund. We've seen money going into FX, moving around in FX into some of those perceived havens, like the Japanese yen, like the Swissy, but also the euro. And we talked earlier with our colleague Eddie van der Veld how that's not a typical reaction. We're not seeing a dollar bid here. The dollar is actually down. The Bloomberg dollar index down a 0.1%. The DXY down 0.5%.
And of course, the implications for the central banks. That's the link there is the money markets are now starting to pull back their bets for rate hikes.
And perhaps reflects positioning. If the market's a very long dollar, you often sell what you can sell, not exactly what you intended to. Certainly, we've seen that with gold in other instances of risk off. We're not seeing that today, though. The gold price still 1,800. So we are seeing that acting as something of a haven, up about 1.2% compared to the previous close. Oil price is weaker.
Oil prices take an absolute battering. They look past that release of reserves, now down around 3% in terms of what you're seeing with WTI. 5%, I should say. 5% for Brent, 6.5% for WTI. So massive squeeze there across the oil space. Another place where it's not proving a haven is cryptocurrencies. Bitcoin down 7.5%, Anna. OK,
so that's another one to add to the mix. Now, we will, of course, continue to be across this story. The market response to the announcement of another virus variant, first discovered in southern Africa. We don't have a name for it. We don't have a Greek letter for you just yet, but it seems as if the World Health Organization is looking into all of this, and we wait perhaps a couple of weeks to find out the details of what they know. More surveillance is ahead. This is Bloomberg.